Hey everybody, and welcome back to Mindfully Trading, where I share educational videos related to trading the Forex market, as well as an insight into my journey as a Forex trader. In this video today, I'm going to be sharing with you my weekly outlook for this week, the week commencing Monday, the 17th of July, and I'm going to be focusing primarily on pound dollar, which is the pair that I actively day trade. If you've been following my channel, you'll know that I have quite a busy lifestyle because I'm currently full-time trader, full-time mother, and I'm also 30 weeks pregnant. So I'm going to be keeping this video fairly concise and just getting straight into the analysis, starting with the fundamental analysis here on Forex Factory News. So that's forexfactory.com. All the resources, all the software that I'm going to be talking about in this video will be in the description below. And please make sure to like and subscribe if you enjoy the content. Let's get straight to it. So for the fundamental analysis, basically this is looking at any upcoming news and events that are due out this week. And I mainly focus on news that affects either the Great British Pound or the US dollar because they are the major pairs that I trade. So just looking through here, it's quite interesting because I've noticed that for both today, for Monday and for Tuesday, we actually have G20 meetings all day. Now, these meetings are attended by bankers from 20 industrialized nations, including G7 nations. So these are all major countries that can affect some of the major pairs, including the Canadian dollar, the euro, the Japanese yen, the Great British Pound, and the US dollar. And the meetings will be closed to the press, so we won't really know what's going on until the meeting objectives are released later on. So it could provide a little bit of choppiness in the market. It's not actually a major news, but it's something to just be aware of, because if you notice the markets are a little bit choppy Monday and Tuesday, it might be sensible to just sit out and wait for those meetings to conclude. Just something to be aware of. Alongside that, today we do have upcoming news for the US dollar at 1:30 p.m, which is GMT time because I'm based here in the UK, and that's Empire State Manufacturing Index, so that can affect the markets as well. Moving on into Tuesday, there's some major news release on Australian dollar, and then the main news release will be in the afternoon on Canadian dollar, which is CPI, and then US dollar, which is the core retail sales. Both of those are quite significant. There's also CPI due out later on for the New Zealand dollar if you trade that. But that's quite significant news. So if you are trading those markets, or if you are currently in a trade, important to just be aware of those times because you might need to edit your trades accordingly just to manage your risk. For me, I'll be waiting until that news release to see if the news lines up with the technicals and if it provides a trading opportunity. Moving on into Wednesday, there's not really a major news on the US dollar, but in the morning, 7 o'clock GMT, there is CPI news release for the pound. And again, that can provide an interesting trading opportunity because it tends to just bring a little bit of volume and volatility to the market. And as day traders, volume, volatility, movement are our best friends. On Thursday, we've got some employment change for Australian dollar due out. So that could be interesting if that's a currency you trade. And then 1:30 GMT is unemployment claims for US dollar. So again, that could provide some interesting opportunities. And Friday looks to be a little bit quieter because there's no red high impact news there. Core retail sales for Canadian dollar and retail sales for the pound could be interesting if they are pairs that you actively trade. So there's a rough overview of some of the main highlights, some of the high impact news and events that are due out this week, how they may affect the markets, and how it's best to just be aware of those and cater them into your trading plan. But now I'm going to hop onto the charts on tradingview.com, the charting platform that I use. I've used it for over 5 years now. It's brilliant. And I'm going to go through my technical analysis, starting with the weekly time frame. So here we are on the weekly time frame. I like to focus on pure price action, so you'll find no indicators on here, but it might look a little bit messy, and that's because these are all drawing tools that I do use for my analysis, and I will explain what each one is and why they are on there. But the main thing to look at the moment, if we just hide those, is current market structure for the weekly. Although we had been coming down for most of last year, at the end of last year, we seem to have hit a bit of a turning point. And from then on, price has been swinging higher. So it seems like we have been turning into this nice uptrend for pound dollar. And what is most interesting to me is the last few weeks we had been in this period of pullback, but the previous week and then last week, we actually had a significant push up. Last week was a very strong bullish push up, which made some wonderful opportunities for longs. I managed to capitalize on them. I shared them in my video last week, and I hope you guys did as well. So the main things to be aware of from the weekly time frame are the fact that we had this Very strong bullish momentum candle up, so we are definitely in an uptrend, and I'm looking for some push trades to the upside. Another thing to be aware of as well, looking on the left hand side here, is that we may be coming into this interesting area where previously there was a little bit of consolidation, so that might make a knock-on effect. But I'm going to jump on the daily time frame, which will give us some more information on how we can use that and make a plan moving forwards. So here's the same information on the daily, but there's just more candlesticks because there are more days on here. And all of these black horizontal lines are institutional price levels. So they are significant key levels that institutions and banks tend to use, and they're usually around the half and the whole dollar. So I like to have them in there because they are part of my day trading plan. The blue lines are some key levels from the weekly that we saw just before. So these significant points here and again down here. They may come into play as price gets closer to those. But zooming in on most recent price action on the daily, here's that pullback that we experienced for a few weeks. Price has broken this high and we've basically just been pushing up. Now, there are two things that price can do now. Price can basically continue pushing up, breaking the high of the previous day, which is where I would be looking for a push trade in line with that uptrend, or price may decide to pull back. So you can see that Friday actually closed as a little bearish candle. We didn't break this previous high, we dropped down. It might be that the start of this week, it might coincide with those G20 meetings and the uncertainty. We might get a little pullback from price. So what I'm going to do is go through the analysis process and look at areas where price may pull back to if it does pull back. And the other hand, if it pushes up, for me, it will simply be a case of breaking this high and then looking for a long. So I'm just going to check my previous analysis and show you what these drawing tools are. So going from the most recent pullback here, I used the Fibonacci retracement tool from the low using the bodies only. And I dropped this at the high of this leg. And these three levels, I know it's a little bit confusing because of the institutional price levels. In fact, let's just remove those for the moment. These three levels here are the optimum trade entry levels, that the 62%, 70% and 79%. But to save having the fib on, I've basically drawn this box which highlights those levels. So I can remove the fib just to try to keep my charts tidy. If we see a deeper pullback on the daily, that could be an area that price drops into. It's also coinciding with this previous high and the institutional price levels. So I'll leave that on there. Now that's the only bit of information I can really get from this daily because that uses this previous pullback. So for the more short-term price action and market structure, I will be dropping to the 4-hourly time frame, which is the same move, but we just have more candlesticks because each candlestick represents 4 hours of time. And we can see here, this is that same pullback from the daily, the one we've used to calculate this fib tool. Now price pushed above this high and it closed, and it made a little temporary pullback here, pushed up, made another little pullback here. I'm not going to include that because that's so small, and it's gone all the way up to the highs here. So if we zoom in at the top, the most recent pullback on the 4-hourly would be this one down here. So I'm going to do the same process of dropping my fib at the bottom, using the bodies only and dropping it at the highs here. Just to have another area where price may pull back to. It wouldn't be as deep a pullback as that daily move, but it could be a pullback it needs to gather some momentum before pushing higher. So once again, I'm drawing a box at these 3 optimum trade entry levels. And this would be quite interesting because it coincides with this little consolidation area we had. And also just above there, this blue box is a fair value gap. Fair value gap is where from candle number 1, we had candle number 2 push up with momentum, and then candle number 3's wick doesn't quite touch candle number 1, so it creates this little gap in the market. Price historically likes to fill those gaps. It's drawn to it like a magnet. So if it is this week that we start to get a sell-off, we've got 2 reasons for price to come down here. It might come to fill this gap. It might come to retest this fib level, and there's also an institutional price level. So we might get some sort of consolidation here before pushing up higher. Finally, I'm going to just hop to the 5-minute time frame. That's the time frame that I usually calculate my actual trade entry and exit on and execute trades. I'm not looking to take a trade now. This session is purely for analysis and foresight for the week. But what I like about this is I have these dividers which show me each day. So this day is Thursday, and this is that Friday that closed bearish. Now Thursday was such a strong push up. We've got that fair value gap, and price continued to push up. It closed very strong, and Friday we had quite a sideways moving day. So what I'm going to do firstly is I'm going to just draw a line for the low of Friday. And as we can see today, price has already broken that low, so it looks like it's already kind of trending lower. And once again, there are two options that price could do today. Price may decide to continue lower and it could fall into this area we drew earlier, or price may gather some sort of momentum. If the news is positive this afternoon, it might push higher. And that's why I've got this final level drawn here, which is from the 5-minute time frame. So what is this level? Well, the yellow box here is actually another fair value gap from this move, where we had this consolidation and price pushed up. This candle is a very strong momentum candle, and that tends to be where orders have been missed or orders are sitting, orders need to be filled. They provide liquidity and movement in the market. So I've drawn this fair value gap here, and it also coincides with another Fibonacci level that I used from the low of this pullback, and I dropped it at the highs. And you can see those three key levels there have been drawn out with this box. So I've got two areas of confluence here for a possible pullback down. And so far today is quite interesting because during the Asian session, we kind of broke the previous day's low, Friday's low. And during London, it looks like we got a push down into this level and then immediately a push back up, taking out the open of the day. So that could bode well for, it might even be doing it now, another retest of this area to get in for a long. But I won't be doing that until the news has been released for the US dollar, because obviously if the news doesn't coincide with the technicals, then it's a sure way to just get a losing trade. But I will be watching this afternoon, because if we do get a retest of this area after news is released and we start to see some sort of candlestick pattern, something that looks like the buyers are coming in, some momentum, and may get long here for a move to ride up towards that previous daily high. But it's that uncertain part of a market move where you've had a strong push up. We're in this period of pullback. The 6 o'clock closing 4-hourly candle was bullish, but it wasn't strong. It was a doji. So the buyers are there, but they're still not sure. There's not strong momentum. And I like strong momentum to get into a trade. So I'm not in a hurry to get into a trade today. I'm more interested to see what price does. I think there is a chance that we might just get a slow start to the week. I have a range of areas drawn out to see how price reacts to them. And once I get a reaction, then I can respond according to that and see if I can capitalize on the market. But primarily for me, my weekly plan is going to be looking for longs. And ideally, it's going to be at one of these key levels of market structure in confluence with Fibonacci, institutional price levels, and fundamental news. So I wish you a brilliant week trading. I hope you managed to capture some market moves, but all importantly, manage your risk and protect your capital first and foremost. If you've enjoyed this video, please be sure to hit the like button and make sure you subscribe to the channel below, and I'll catch you on my next video. Thanks for watching. Bye.